Before I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts.
Welcome back to Talk Stocks with me, and a warm welcome to our new viewers. This is another weekly market digest where we focus on data-driven insights, cutting through the hype, fraud, and emotions that often cloud decision making. Today, we'll start with a quick class on trading the trend, then recap the markets, review the NGX market internals, and wrap up by highlighting short-term trading opportunities in the US market. Let's get started. Alright, let's talk about the trend. Think of the trend as your friend. Price is basically showing you what the market thinks. When you trade with the trend, you are moving with the big players instead of trying to fight them. Now, here's something important. The trend is said to be innocent until proven guilty. You shouldn't try to guess tops or bottoms. I know many people try to do that and try to become prophets. The market should tell you when the trend is over, and until it does, you should give it the benefit of a doubt. Now, this is super important, especially if you're just starting out in the stock market. In the short and mid-term, following strong trends keep things simple for you. It cuts down on noise, it reduces emotional mistakes, and actually it gives you an edge. If you do decide to pick stocks randomly, that's like walking into the market blindfolded. You might get lucky, but more often, there's no trend, no momentum, and no clear direction. So promise me, when next you go into the market to look for stocks, try to infer the presence or absence of a trend. That's going to give you an edge, and that's going to make you profitable in the long run. Part of the reason why I went through the importance of trading the trend is because every week I come, and while giving this market recap, I am able to identify across various markets or indexes. I'm able to use data to tell you where you have a trend, especially when it's bullish or bearish, or when there is no trend, which I identify as neutral. Now, I'm hoping with the previous discussion and this discussion, you'll be able to piece part of the puzzle together, and hopefully that helps you in your journey in the stock market. A little housekeeping before we get started, especially because we have new viewers, and also for old viewers, we're going to act as a form of revision. My key defines how I'm able to arrive at detecting a bullish trend or a bearish trend, or when there's no trend on the chart. And based on this, I'm able to identify the short-term bias and the mid-term bias using the daily time frame and the weekly time frame. Let's go. I identify a bullish trend when the close price is above the 20 exponential moving average, and I see the plus DMI is above the minus DMI, and the ADX value is above or at least 20. The higher the ADX value above 20, for example, when I have 40, 50, then I even give it a hash, meaning it's a very strong trend. A bearish trend, on the other hand, is when the close price is below the 20 EMA and the minus DMI is above the plus DMI, and the ADX value is at least 20. For situations where I'm able to not detect a bullish nor bearish trend, I label that chart as neutral, meaning it's neither bullish nor bearish. WTD stands for week to date, meaning this week, from the beginning of the week till today. YTD for year to date, and PY is the previous year, which is 2025. Again, I'm not going to run through all this. I'm only going to focus on the key and useful information, which is where do we have a bullish trend, especially for people who long the market. Again, if you are someone who likes to short the market, you want to be focusing on where you have a bearish trend. So right off the block, the US small cap stocks, which I track by the ETF VTWO, this week posted 2.50 return. Year to date, meaning from the beginning of this year till today when I'm speaking, VTWO has printed 7.91% versus 11.41 in the whole of 2025. In the daily time frame, I'm able to detect a bullish trend. Similarly, in the weekly time frame, I'm able to identify a bullish trend, and I hope you know what that means by now. The next market that is bullish is the Canadian market, or Canadian equities, which I track via the ETF VCN. So if you purchase this ETF VCN, you are holding a basket of Canadian equities. This week, it returned 0.83%, and year to date, VCN is up 4.19%. The daily time frame, I'm able to detect a bullish trend, and on the weekly time frame, I'm able to detect a bullish trend. So both time frames is what I use to identify my short-term buyers and my mid-term buyers. The next market that is very bullish is the Nigerian equities, which I can measure by the performance of the NGX ASI. You can't buy ASI as an index, but you can buy an ETF that tracks 30 of the biggest stocks within the ASI, and I believe that will give you reasonable exposure to the Nigerian market. So, but in general, the ASI delivered 2.36% this last week, and year to date, the ASI is up 6.76%. The short-term bias is bullish, and I'm very strong about the market. That's why I have an asterisk. And also the mid-term bias is bullish with an asterisk, meaning it's very strong. The next market that I think is worth calling your attention to is gold, which you can buy through the ETF GLD. There are other variants, but GLD is like I'll say it's one of the popular ETF that tracks gold. This week was basically flat. You can see it. The return was like minus 0.05%. I'll say that's flat, like it's consolidating, or it just, let's say it's flat this week. And year to date, gold has delivered 6.30%. My short-term bias is bullish, and my mid-term bias is bullish. The US large caps, the Nasdaq in general, have a neutral outlook across both time frames. I'm hoping, based on this and my area definition of trend, you can pick some value from this slide going forward. The NGX market internals is my data-driven look at the breadth and strength of the Nigerian stock market. The NGX ASI, which comprises of 144 stocks across at least 5 to 6 sectors, namely consumer goods, oil and gas, insurance, industrials, and banking. How do you read this report? I label the index as strong with a green circle symbol, and this implies broad participation, meaning you have broad participation by the sectors, meaning the sectors, you have many of the sectors contributing to the bullish move. It could also be a neutral rating where you have fair participation, or it could be weak where the market is not moving up, it's just trending down, or moving sideways, and it could be narrow participation. Now that this housekeeping is clear, going into the week, the market, I've identified the market has a strong market, meaning it's bullish and there is broad participation from the sectors. At arriving at my definition for the market, I go through different measures. First of all is the moving average breadth. So I'm looking for the percentage of stocks within the NGX ASI that are trading above their 50-day moving average. This week ended with 85% of stocks trading above their moving average, which was 5 percentage points better than the previous week. So if you are an examiner, you're going to grade this A+. The next measure I look at is the percentage of stocks trading above their 200-day moving average. Again, you can see that we ended this week with 82% of stocks trading above their 200-day moving average, which was flat week over week. Again, 82% is A+ grade. The next evaluation criteria I use is the Weinstein stage analysis. So on the index, I care for the percentage of stocks that are in an advancing phase. This week ended with 83% of stocks within the basket are trading or can be classified as stage 2 advancing, which is a 9 percentage point increase from the previous week. 83% is also an A+ grade, right? We have A+, A+, A+. The last measure I use is the percentage of stocks that are in a strong stage 2 uptrend, and you can see it was flat week over week at 42%. Trust me, this is the highest of highest classification, and for you to get at least above 40% is beautiful. I would also score that a high grade. So check. That's why we have a strong market. Now, why is it broad participation? We are going to look at the sector performance identifier here. Again, what I'm doing here is I'm looking at the indexes and the sectors. They have tickers, right? So you can use those tickers to identify whether they are in stage 2 advancing or they are in a strong stage 2 uptrend. This label that I identify here as strong advancing sectors of index is the same as this, which is strong stage 2 uptrend. So the NGX ASI is in a strong stage 2 uptrend. The NGX 30 is also in a strong stage 2 uptrend. You can actually participate in the NGX 30 via an ETF. So I can't remember it on the top of my head, but I'm sure next week I would bring it to the community. The consumer goods is also in a strong stage 2 uptrend. The oil and gas sector is in a strong stage 2 uptrend, and the insurance sector is in a strong stage 2 uptrend. So the other sectors which are either just advancing or declining include industrials and banking sector, right? I could be more thorough to actually split them out again to advancing and then another row for declining. If you want me to do that, please drop a comment in the video in the section and I would update this. If you feel that it's going to bring you more value, I'll be happy to do that. Remember, market internals help us see beyond the index. Are many stocks and sectors participating in the move or just a few? In simple terms, I'm looking under the hood of the market. So beyond all the glamour and bliss of the market was up 5% today, 1% today, I am actually opening the hood of the engine, of the car. I want to look at how rotten or efficient the engine is, because if the engine is rotten, then the market might slow down soon. But if the engine is still efficient, all the parts, all the components of the engine are firing efficiently, then the market is going to continue to do beautiful things for our portfolios. Looking to trade the US stock market this week and hoping to go long, one way you can go about is by identifying the strongest sectors, specifically in the short term. One way is to use the performance metrics, right? So it has the 1 month, 3 month, 6 month, and the different markers, and you are able to identify stocks that are showing superior strength versus the market. My chart here is showing the sectors in the US stock markets that are showing strong short-term momentum. You have the industrial sector, the material sectors, the energy sector, consumer staples, real estate, and consumer discretionary. The darker shade of green is the return in the last 3 months, so 3 months to date. So not just 3 months, 3 months to date. And the lighter shade of green is the month to date performance. So this chart here, if we focus on industrial, on the SPDR Select Sector Fund Industrial, this is an ETF that tracks the industrial sector of the US market. You would have been up 7.25% in your portfolio this month if you are holding this ETF. That's how to read this chart. Similarly, if you've been holding the Material Select Sector ETF from the last 3 months to date, your ETF will have done 13.63% in your portfolio. So the idea is, if you know the strong sector in the short term, you could use technical analysis to time your entry, hold that ETF, and put your stop loss to manage risk, right? So that's using short-term momentum to identify the ETF or the sector you want to trade the with. Another approach is to further look into which stocks are actually driving the performance within each of these sectors, right? That's what I classify as strongest stocks in strong sectors. Now, what I have on the right here is a further breakdown of the strongest stocks within the industrial sector. You have HII, LMT, CMI, BLDR, LHX, SWK, EXPD, NOCBA, LUV. You just stop there for now. And you can see what they have delivered so far this month. So you can see why the ETF has just done 7.25. It's safer, right? Because it gives you like a weighted average across the stocks. You can see what the individual stocks are doing. 25%, 20%, 13, 23, 17. So the trade-off of ETF is that it's safer. It's less volatile than the stock, right? And again, my way of identifying the strong stock is through my custom adjusted score metric, right? It's a custom score that I developed to solve, or to help me look for sanity in a market that is chaotic. That's how I look at it, right? So based on this, again, I'm going to use technical analysis to time my entry, and as always, plan that the trade might go against me by using stop loss, right? No one wins all the time, and if you do, please drop a comment in the section. I would like to meet you. So the big picture takeaway this week is balance, not aggression. The major US benchmarks and global equities are largely in neutral territory, which tells us the market is digesting gains rather than offering broad-based opportunity. The real leadership is coming from small caps, US small caps, Canadian equities, Nigerian equities, and gold commodity, areas where both short and mid-term trends are aligned. On the flip side, Bitcoin's bearish mid-term structure and oil's lack of direction remind us that not all assets deserve capital right now. This is a market that rewards selectivity, patience, and trend alignment, not chasing everything that moves. Remember, it's all about data, not hype. Stay sharp, and we'll see you in next week's digest. If you found today's video helpful, drop a like, hit subscribe, and share this video with your friends and colleagues. I'll see you next week. Stay safe. Bye.